Fintech Chatter podcast, brought to you by Tier 1 People, the leaders in executive search for fintech ventures.
Honey's been at it for about 4 years. We launched publicly about 2.5 years ago, June of 2021, and we've really hit our stride. We've grown from about 20 to 100 people over the past year. I got Entrepreneur of the Year from the CEO magazine last week, and I think really excited that we were on the Deloitte Fast 50 on the tech side of things. So we were the 6th fastest growing tech company in Australia this year, which is it's a great testament to the team. And as you know, there's just so much grind that happens behind the scenes. So it's nice when the 1% of the time you can kind of pop your head up and actually just take a breath and smell the roses and realize that it's working. It's it's nice and important, I think, for the team. So it's wonderful. It's a tough space, I think, to get to fast space is what I'd say. I think once you have some scale and you have the capital and the team and product market fit, then it's the barriers to entry are very high, is what I would say. So Honey is a home insurance company. So we're trying to create a digital home insurance company, a next generation version of what you'd see out there within the incumbency. There's in Australia about 5 companies that control 85% of home insurance in Australia. To give you a sense, it's mandatory, so you can't even get a home loan without home insurance. So everyone understands it. Everyone knows the feeling of getting the price jacked up every single year. Loyalty taxes, it's pervasive. And so there's a lot of things that are broken in the industry, from how pricing works to how distribution works to even just how people are engaging with their customers. No one's really actually trying to reduce risk, for example. So the idea of Honey is, how do we actually reduce risk for people in their lives so they don't actually make a claim in the first place, and then how do we make everything totally digital, right? From how you sign up in 3 minutes to how you make a claim in hopefully 2 days, not 42 days, in terms of it getting sorted out. The aspiration really is to streamline it so the insurance policy is actually supportive in your life and helpful, and rather than just something that sits in the background and is difficult to use if that day comes. We have a whole product roadmap at the moment. One of the things that we do, for example, is that when people sign up, we send them, it's about $300 of free smart home sensors. So the 3 biggest things that can happen to someone's house that's avoidable would be flood. Yep. So typically your flexi hoses might bust. There might be a drip, for example, because you didn't clean your gutters on the roof. So it's flooding, it's fire, and it's theft. And of course, what people fear is not necessarily what the data supports. So, people are very scared of fires, for example, but it turns out you should be much more fearful of flooding, as an example. Electrical fires are quite rare. And so those sensors, all 3 of them do the same thing. If your fire alarm goes off and you're not at home, you get a text and an email, saying, hey, your fire alarm's going off right now. You might want to go home or make a call. You get a text message as well if there's a water leak. So typically people would put one underneath their sink or put one near the bathtub, areas like that. And then often they'll put one next to the garage door or your front door. So if the door is left open or it opens when you're not home, you know about it. So it's almost like a very simple DIY home protection kit. And when people sign up to Honey, they don't just get that, but we actually give them a discount if they put it in. So the whole idea is, how do we give people technology? How do we give them services so that we actually reduce risk? So if you just want to buy a home or landlord policy, it's like, hey, Dexter, if you just want to buy a policy, it's a great policy, easy, great coverage. by the way, if you want to put in the smart home tech, you get a discount. And then we're going to have other services and technology over time that get rolled out where you keep getting discounts, for example, or subsidized equipment and services in order to stay safer at home, right? So ultimately, I think the bogey for what the industry should look like is actually having lower home insurance and other insurance products as well over time. The price should actually go down if people are better behaved, rather than the way it works now, which is that the behavior of that individual person is not included in how the price works, right? All we know is your house is your house. We don't really take into account if you're a good or a bad actor, so to speak. I mean, well, we have, tens of thousands of Australians that have, sensors now installed throughout their houses, right? So it's at scale. Honey, to answer your question directly, Honey runs at a 91 NPS score. My understanding is that's never been achieved in the history of the industry. Anywhere close to that, in fact. And so, the customer testimonials are kind of off the charts. The industry average ranges from 6 to 30, depending on the year that you look at. And so 91 is, I think, a really strong indication at this point that people love the experience, both the purchase experience, the claims, the onboarding. We're now going to be launching in a couple of weeks a notification. So if there's bad weather in your area or something to be concerned about, you get a text message to give you a heads up ahead of time. Yeah, and so when I set up Honey originally, I realized that there were two very different businesses that could exist. And I think when you look at a lot of the businesses that haven't worked globally, many of them stepped into underwriting. And so instead of focusing on the insure tech piece, which is really about digitization, it's about distribution, it's about novel experiences for customers and data, instead of focusing on that area of the value chain, they stepped into the capital management. And if you think about the skill set that's required there, that's a game of scale reinsurance purchasing in Bermuda. That's about catastrophic risk modeling of cyclones. Like, it's a totally different skill set. And there's no question an incumbent is better at that than an insurtech like us will ever be. And so I've tried to avoid that desperately. And so we have a partnership with RACQ. They've been wonderful. The CEO of RACQ sits on our board, David. They're the largest shareholders of Honey. And so RACQ do the underwriting component. And they absorb that risk, which means Honey can focus all of our time on those other components. So we focus all of our time on how to work with Bank of Queensland or with AGL, with all these great partners on distribution, on digitization for customers, novel experiences, and of course data. And so I think it's really important to kind of know where is the area that you can add value in the value chain, and make sure that you don't meander into diluting your ability to focus on that. But there's no question a startup can never be balance sheets competitive against an incumbent. I think that's a foolish battle to try and fight. The traditional way to raise money is that you knock on a venture capitalist door, of which there are limited options in Australia, and you say, this is my widget, do you want to fund it? I think the reality is there's lots of different capital sources. Of course, there's venture capital, there's venture debt, there's family offices, and there's international investors, and then ultimately there's also customers. I am a huge proponent of always raising money as much as you can from value add, which to me is thinking through what is the biggest failure point for a startup, and then how do you raise money from someone who can solve that problem. So when we started the business, we raised about 15 million or so out the gate in a seed round. That money came from RACQ as the underwriter and from our distribution partners. It came from AGL, and it came from Metricon and Mervac and all of these folks that could help us get the product designed and ultimately start to get it sold in the market with that, kind of build that muscle. And so I think, as a starting point, you have to be very clear about where is the best money to help de-risk a business. And often people don't like doing that because if the smartest person who's closest to the problem, that customer, doesn't like what you're doing, the truth is you need to be looking in the mirror and asking, if you're really solving the right problem, right? So it can be quite, I think it can be quite difficult for a lot of folks. But I think ultimately I've gone to a lot of the customers, and most of the money that we've raised so far has been we've raised about 40 million so far. There'll be a big announcement on another funding round in first quarter next year, and most of that money has really come from strategics. Yeah. So I've really focused on customers as the funders of the business and the partners in helping to build the business, as opposed to just getting money, so to speak. Yeah. observation as kind of an outsider that's now somewhat in the inside from outside of Australia, I think, in places like the US, I moved from Palo Alto, San Francisco, right? So I think when you're in places like the US, it's so competitive that the incumbents are highly incentivized to find ways to partner on core value props. Yeah. Whereas when you're in a smaller market like this, especially an oligopoly like we have, the incumbents are not incentivized to really experiment, right? So when I originally came to Australia and I met some of the incumbents, they told me flat out, they said, listen, our biggest profit pool is where you're looking to play. We're not going to help you get to market because we're not under threat, essentially. Yeah. And so I think, in an environment that's highly competitive, you have less of that headbutting, you have more collaboration because there's a genuine feeling from both startups and incumbents that they will always be under threat. They don't have a monopoly, so to speak, or an oligopoly, right? I think in an environment where everyone's cozy and protected, whether it's banks, insurance companies, you name it, right? Supermarkets, it doesn't matter. They're not under as much threat. And so the consequence is that they can be much more isolationist when it comes to actually putting core profit pools at risk for innovation. So I think that's just one observation. But in terms of how we did it, I went to companies that were interested for their own selfish reasons in improving their core retention. So for example, if you think about an energy company or a retailer or a telco or any of these companies, ultimately they don't really care about insurance. What they care about is I sell a house or I sell home internet, or I sell energy and gas, and I want my customer to be really, really happy so they stick around for longer. That's my core metric as a business. And if you can give me a 91 NPS score and this amazing experience for my customers through insurance, yes, we'll make a bit of money there, but really what I care about is how do I improve that core retention, the customer through bundling is going to want to stick around for longer. And so I spent a lot of time with companies who were interested in customer experience, not just making $1 on an extra value-added service. And if that's the case, they're going to be highly motivated to try and partner. And so I didn't go to the big insurance incumbents and say, help me, right? What I did was I went to all of the distribution partners and I said, you are selling a core product. If we're right, we think that we can really wow a customer. We can keep them safer. We can really shake something up and do something special for them. And the result is that if we're using your brand on this experience, then your core product will be stickier, right? And so I think their motivations generally were to do right by their customers and create a stickier experience. And so that trumped kind of getting involved in the small oligopoly and hoping someone would break rank, which I think is always challenging.
Am I right in saying that you were quoted as saying something along the lines as it's easier to get a startup off the ground in Australia than it is in the US?
I think in some ways it is. I think in some ways it is. It depends a lot on the type of startup, obviously. Yeah. I think Australia is much easier to replicate than it is to innovate, at least in the early stages of a business. In the US, if you think about Australia, you either have to think small or you have to think global on day one, right? Like that's as a general concept. And I think in America, you can think big and domestically on day one, just because of the size of the market. And so you're very incentivized, and the investors are very incentivized to tell you to do things that are super innovative and novel because the stakes are so high. In Australia, it does lend itself better to replicating, so to taking what's working already in other countries and localizing that. So I think the playbook is different. But I do think in Australia it's far less competitive. I think there's not that many entrepreneurs who have done it several times. Yeah. And there are a lot of great early adopters and partners who want to innovate on the company side. Yeah. I've been really heartwarmed, I think, at how many Australian companies have wanted to step up with Honey and work with us to innovate, and there is kind of an open field, I think, for that. Right. True. Well, look, we obviously, as you said, we have a great space. People are very well compensated on equity. There's only so much you can do on cash to compete with incumbents, but every single person in this company has equity, and in some cases meaningful equity. And so people really feel like they're in it. So I think having a clear North Star, having everyone have skin in the game matters. I think as well being super transparent matters. One of the things that is most important to me is trying to make Honey the first stop on many people's journeys where they ultimately will become entrepreneurs or join other early stage companies. I will or won't build again. I don't know yet. I would love to if I have the energy to stay on the field, as they say, and take the hits. But there's the PayPal mafia and the eBay mafia and the Google mafia, and I think that it's an incredible thing to create a company where people go off in the next 15 or 20 years and they can use the money they've made here and the skills they've made and what they've learned to have a honey mafia, so to speak, and they build together and work together, and that to me would be one of, that would really be something I would, be an extraordinary thing to reflect on, I think. And so I try to be as transparent as I possibly can with the team. We do fireside chats. I try to do one-on-ones as much as I humanly can. We have almost an open book policy, essentially, on everything. And we do that. I do that because I want people to actually understand what's inside the box and how it works, so that they can go off and do it again, right? They're not just in their own silo. So part of that is important so they understand how their day job contributes to the broader picture. But I think part of it is just skill set. You learn by osmosis, and there's not really a replacement for somebody telling you why they're nervous about this, or this may not work, or why we screwed up about something. And so I think for me, a lot of it has to do with how do we equip people with the skills and the knowledge, so if they want to go build again or join another early stage startup, they're empowered to do that. I want people to leave in 2 or 3 years, really I do, because I think a rising tide raises all boats, and I think the more we can skill people up and they go off and do other things in the Australian ecosystem, I think we all win in the end. I think one of the benefits of having done it several times is that you know the right questions to ask. There were several people that did join on day one that didn't make it. There were several people that said they would join that just in the end didn't quit their jobs. There were 2 of them. So, I think what you see as the veneer is different to the reality, right? If there were 6 people joining on day one, only 3 really joined, as an example, right, on the exec team. So firstly, it wasn't so simple. I would say that once you've done it for a while, you can just be more honest with people. You're like, look, this is what you're signing up for. This is what's amazing about this ride, and this is what's going to be really tough about this ride, And I think the more experience you have, the more you're able to ask the right questions and be honest with people. And so people kind of self-select in or self-select out. And it's tough, right? Because you want to sell people and you're desperate to get this amazing person to join and to build with you. The reality is if it's not actually the right thing for that person, then you're doing them and you a disservice. And so I spend a lot of times, early when I'm building companies to try and understand on the founding team what's actually right for that person, right? Because if someone's got 3 young kids at home and their partner doesn't work and and they've really been at a big company the whole time, and maybe this isn't the right thing for them. Maybe it is in 10 years, but maybe it's not the right thing today, right? And so I think it's very important not to just sell. I think it's very important to rather just try to figure out what the truth is. What's the truth for this customer? What is the truth for this investor? What's the truth for this potential founding team member, right? Like, what is actually the right answer for them? Should they be an early adopter? Should they put in money? Like, what, and I think the more you're just searching for whatever the truth is with these people without being attached to just selling, which is, of course, the default for all of us as founders, I think the more likely that you actually get the people on. Exactly what I wanted. It's the right thing for me. Of course, I want to be an early adopter customer. Of course, I wanted to fund you right now. I knew what you were thinking about. Or, of course, I knew I'm taking a 50% pay cut, but I can create significant wealth. My family's on board for this. This is exactly what I wanted, right? And I've made a lot of mistakes in the past overselling. Yeah, I'm super excited for the year ahead. We're ramping up, so the business will be hiring a lot of people. We'll be making a very big announcement in the first quarter, which I think will be one of the biggest funding rounds, certainly in fintech and insurtech in Australia ever. And we have, I think, 2 of the top 10 brands in the country. We'll be launching with Honey as well, so we'll be announcing that in the next 3 or 4 months as well. So we've got some amazing partners. We've got some amazing tech and services that our product and engineering team is working on to really wow customers, which I'm super excited and proud of. And then we've got amazing investors joining the group as well. So we have a lot going on, and certainly there's no slowing down in sight, which is the way I'd like it to be. We're on LinkedIn, of course, but honeyinsurance.com, www.honeyinsurance.com is where all of the job ads are put up, and then our LinkedIn is pretty well trodden as well. You'll see a lot of updates and job openings there as well.